A lot of concern about a brewing trade war between the United States and China these days. We want to talk about that and a lot more with one of China's leading investment bankers, Donald Tang. He's CEO of the CSIP Group. He counts among his investors Roger Altman, Hank Greenberg, and Citic, China's largest securities firm. You also may know him from his time as a top executive at Bear Stearns. Thank you for coming in today.
Thank you, Margaret.
We spend an inordinate amount of time talking about this debate over just how fast China should allow its currency to appreciate. Is that the prime focus for investors doing business in China right now?
Well, there's certainly a currency play at hand. The Chinese currency will appreciate. It depends on how fast and how much. So in a way, this is just partially addressing the global imbalances between savers and spenders. It's not addressing the whole picture. So if you're asking me whether there is a play, yes.
Well, it's the access to market that we hear about so often from investors who are trying to do business in China right now. So how much of a barrier to entry is there on that front?
Well, as we know, China probably has been the friendliest place to do business in the last 30 years, as the open door policy instigated or installed by the late Deng Xiaoping, and ever since then it was a story unfolding ever since that everybody around the world had benefited from, including the Chinese.
But where is it that you see, maybe not the ease of accessing a little bit more, but the opportunities for access? Where are the areas that American corporations should be looking into?
Well, for the corporate America, it really needs to find a platform in China to aggregate and congregate the local entrepreneurial talent, and then to use the platform to expand the product platform and expand. There is a issue of capital needs in China. It's not really that big for the private enterprises, but the know-how need is huge. The standardization, putting it all together, how to replicate. They have a lot of consumers and need a lot of products. How do you do that American way? Because we know how to entice the consumers to come and spend. It's
scaling a business that China needs. It needs that kind of expertise from an American corporation. That's the area of opportunity.
That's right. So if you look at the unfolding stories of China today, it's really the transformation from an exporter to consumer.
Right.
That's a major story. It's what I would say, go west, young men. The hinterland, how exactly that's evolving in the vantage point of hillbillies.
Beyond just the coastal areas where the development is, it's going to be about moving inward.
Right, where was historically the manufacturing story, right? And now it's the
hillbillies.
Story.
I like that.
Right.
Well, talk to me though about, this transformation of China from primarily export to a consumer class. It just seems like a tremendous amount of potential, but the timeline is so uncertain. That takes time to get people to feel secure enough to spend. Where is China in that development process?
I would say, we talk about social network. This is the social security network China is developing. The major build-out of social security funds as well as healthcare system. And that itself will transform the savers from really focusing on saving, to spending. Is the spend, baby, spend. is this thing which will get China going.
But those social networks that you talk about, those safety nets that the U.S. kind of takes for granted,
right?
That's a tremendous amount of expansion that has to happen. We're talking about billion consumers.
Or trillions of dollars, or billions.
Trillions, right. So that's a tremendous amount of cost for the Chinese state.
Right. I think it's a huge challenge for the Chinese state. It's a great opportunity for everybody who's trying to sell stuff, who have the know-how, know exactly how to do around the world, and we should view that as an opportunity.
So when it comes to balancing the appreciation of the yuan, these are some of the things that you say you also have to take into perspective here. China is trying to build out the infrastructure of social investment there, the safety nets for its own consumers. So what's a reasonable amount that they could be expected to allow the currency to appreciate while doing all these other things?
So it is a timetable issue.
Yeah.
Everybody agreed that in order to resolve the imbalances, the Chinese currency will indeed appreciate since June that there's agreement. But the question is how fast and how much and over how long.
And when Jabez said 20%, you don't want that. You don't want us to appreciate that much because of perhaps even social instability, some would say.
It would be terrible for China. It would be terrible for America, frankly. It would be terrible for the people who are shopping at Walmart, for example. Yeah, there are a lot of those implications that we don't want today. That we want to make sure that the gradualism is taking place that benefits everybody around the world.
Do you think that there's risk that that balance is not going to happen in the near term in terms of getting the U.S. to save more and the Chinese consumer to spend? Are they on the same timeline?
I'm not sure if they are, but I know that directionally it's taking place now. China is buying more cars than Americans do, or did last year and this year. Right? So if that's not a sign, what is? China has more subscribers, the cell phone subscribers in China than the rest of the world combined. If that's not spending, what is?
Right.
So there are signs of that, maybe not fast enough. So we have to figure out a way to entice everybody to do the right things. And we're saving too, from nearly nothing to about 5%. That's a lot.
It certainly is, and certainly a sea change in many ways in this country. Well, it's fascinating to hear about the opportunities and the reality you're seeing. We'd love to have you check back in with us, Don. Thank you for coming on the show.
Thank you, Margaret.